A very good evening, everybody. Welcome to the live webinar on Precision Engineered Trading Performance, German DAX and EURO STOXX 50 Futures. I'm Ming Hui from Phillip Nova, and this webinar is brought to you in collaboration with Eurex. Kicking off the session will be Singh from Eurex, and he will be giving us a short overview to Eurex products. Following closely will be our main speaker for the night, Mr. Jose Blasco, who will be providing valuable insights into the European market. Before I pass the time to Singh, please be reminded that if you have any questions throughout the course of the webinar, you can drop them into the questions box and we will address them during the live Q&A session towards the end. And now, without further ado, let's have Singh speak to us.
So good evening, ladies and gentlemen. Thank you again for dialing into the webinar today. My name is Singh and I'm part of the market development team at Eurex. So I'm very excited to have our partners Phillip and Nova and our guest speaker, Mr. Blasco here, and definitely very thankful for their support as well. To start, I'll give a brief introduction to Eurex. So Eurex is a leading global derivatives exchange, headquartered in Germany with multiple offices around the world. In Asia, we have offices in Japan, Hong Kong, and Singapore, where we cover a full range of functions for the exchange and also provide a wide net of coverage and contact points for our members and partners. With the Asian expansion, we have also extended our trading hours to cover the Asian time zone. We offer a liquid order book for active trading from 8 a.m. Singapore time to 5 a.m. the following day, essentially covering 21 hours of non-stop trading. With the Asian hours as well, market participants will be able to access the European markets before Europe opens and can hedge or take directional positions with more control and precision. This is particularly important during risk events such as the banking crisis or the Russian-Ukrainian conflicts that have happened in the past few years. Can we go to the next slide? Yep. So further to the extended trading hours and deep liquidity, we offer more than 2,500 products across 9 different asset classes, including equity indexes, fixed income products, and even cryptocurrencies. On this screen, we can see a range of products offered on the exchange. This is not exhaustive, but will give you a good general understanding of the breadth of the products on the exchange. Next slide. So in terms of trading volumes, in just the Asian session alone, we've had 2.2 million contracts that were traded in February this year. Again, representing huge interest and participation during the Asian hours, cementing the opportunity present for traders across multiple time zones. Next slide. On a global level, we can see how the liquidity further develops with ADV for some of our core benchmark products at almost 1 million in lots a day. These markets are also available during the Asian nighttime and will present further opportunity for traders to get in and out of positions. Could we get on to the next slide? Yep. So for the purpose of today's webinar, we'll be focusing on 2 main products and their micro variants. The Euro STOXX 50, which represents the top 50 stocks in Europe by market cap, and the DAX index, which represents the top 40 German stocks by market cap. And I trust you will find the webinar insightful with Mr. Jose Blasco bringing you through an overview of the European markets and also actionable strategies. So without further ado, I'll pass this on to Jose, and thank you for your time this evening. Over to you, Jose.
Thank you very much, Singh and Minhui. Hello, everybody. A real pleasure for me to be part of this webinar today, talking about Eurex and very modern products to be traded. I'm just setting on my screen to begin the presentation, and I'd like to have a quick confirmation if that's possible, so I know I am being seen, the screen is also visible, and my sound is good. Can I have this confirmation, please? A quick message on the chat would do, everyone. That
All
way,
good on my end.
Wonderful. Thank you so much, Sing. Again, a real pleasure to be here. I am very excited about this session. You will see why as we go through the content. We're going to talk about, of course, how to trade German DAX and the Euro Stock 50. We'll talk about trading techniques. We'll talk about characteristics. A few special approaches, if you wish, that are very useful, especially being in Asia. Before we get started, I wanted to highlight on the upper left side of my screen a financial disclaimer. It is fairly short, and therefore I would like to ask everyone to read it completely. Trading is, of course, a very serious thing. There is risk involved, and while I'm pretty positive that everybody is aware, again, here is the disclaimer for you to read. My name is Jose Blasco. You may be watching this live with me today, which is fantastic, and please be ready to work with me. You will have questions for me, I'm pretty sure. I will have answers for you. I may have questions for you. I'd love you to work with me in the chat box and engage and give me answers as well, so we can take full advantage of this 1 hour together and make this webinar to be impactful instead of just one more webinar. Let's make it special. In case you're watching this recorded, you can see my email address right here. Feel free to email if you have questions after the webinar is over and you're watching this recorded. So precision engineered trading performance, DAX and Euro Stock 50, that's the title for today. Notice there are a few keywords: precision engineered trading performance. So many interesting conversations to have during today's webinar, because obviously as traders, we are all seeking for more performance. We are all seeking for more stability in results. We may be seeking for convenience, meaning trading at a time that is compatible with your life. I mean, maybe you are a professional trader and that's all you do. Maybe you are a retail investor and maybe you have a job and then you want to trade financial markets, and therefore the timing of the day when you can trade and things like that are also very important factors. I didn't mention, of course, the fact that different products have different what we call margin requirements. A simple way to think about that is how much money I need to trade those products. Again, all these products have different characteristics, and in today's presentation, I'm going to try to go ahead and present different ways on how you can utilize such products so it can serve everyone, no matter your style, no matter the hours of the day where you are available to trade, no matter the size of your trading account, no matter if you're new, if you're more advanced. Okay, so again, please feel free to work with me on the chat box. Here is my first question for you on the chat box. Please click OK on the chat box so all of you locate the location on the where the chat box is, so we can interact more easily during the webinar. Okay, a quick OK we do, and definitely I do need that from you guys. Anyway, so let's begin. The introduction, we have a lot of things to talk about, to be honest. We're gonna first talk about why would you even want to trade DAX and Euro Stock 50. We'll talk about what's happening in such markets. We'll look at what's happening big picture, and then we'll talk about the micro contracts or micros, which are a fantastic product, to be honest, that gives you opportunity to be more precise with entries, a collection of things that we're going to discuss, which is very interesting. Then we'll talk about different ways on how you could trade futures contracts, in this case the micro DAX and the micro Euro Stock 50. And then we'll look at not only case studies, which are documented on my slide deck here. Happy to share. You can certainly ask for a copy of the slide deck to Phillip Nova or myself. But also beyond that, I will jump into real-time markets so we can actually identify opportunities together, kind of like put into practice what we are learning, as said in the disclaimer, for educational purposes. Learn from that. So after this webinar is over, you can practice on your own and enjoy DAX and Euro Stock 50, because again, they are fantastic products, as you will see. Oh, by the way, number 9, I have a bonus for you. I'm always glad. I'm a technology guy. I love tech, and I love to help other traders with some of the tools we have. So I'll have a little bonus for you that will certainly help you to identify opportunities in the markets. And of course, Q&A, even though I have it there at the end, number 10. I'm going to be keeping an eye on the chat box all the time as we're going through a presentation, because you may have a question related to something I am covering at that moment in time, and I'll be happy to take it on the fly as well. Okay, so please work with me. still waiting for those messages on the chat box. Do not be shy, and let's work together on this. Okay, it's very important for me, instead of having a generic presentation, to make it more customized to you, and interaction is critical. Anyway, so quick introduction. This is really not why you came here. This is about me and my company, and that's not why you're here. This webinar is for you, not for me, but you may feel interested in knowing a bit more about what I do. Well, I am a trader. I trade multiple assets. Derivatives is my bread and butter, and that is options and futures. Love Eurex products. You'll see why in a moment. Products that were born in computer age, in the time where markets were electronic. So there are some characteristics of futures contracts on the Euro exchange that you would not find in other places. And that's very, very, it's very useful, as you will see. So I trade different assets. I have a little bit of a passion for teaching as well. I used to be a university professor, etc. And again, hopefully my passion helps you to understand the topics better. Sometimes my passion leads me to speak just a little bit too fast. So if that's the case, feel free to tune me down using the chat box and be like, hey, Jose, repeat that, please. Anyway, in any case, the rest of the introduction, you can read it yourself on the slide. As I said, the webinar is for you. It's not about me. So let's begin. So why would you even want to trade DAX or Euro Stoxx 50? Why is it important? What are you missing if you don't do it, right? So, well, first of all, it's a very easy way to be connected with Europe. Europe being a very unique place in the world, I would say. Not because I happen to be European myself, that's a pretty bad joke, but because, if you wish, we have those two superpowers in the world, US and China, and Europe, kind of like being in the middle, if you wish, takes great advantage of opportunities that replicate in Europe coming from all sides in the world. For example, if you think of US as a very large country with very relevant markets and all of that, which is of course true, but at the same time it's one country. If you think about economic reports, if you think about news announcements, if you think about trading opportunities coming from Europe, well, given the fact that Europe is made of so many other countries, just because of that, you have so many more things that could be reasons why the market move either up or down, and therefore thinking like a trader, source of opportunities. So being exposed to European markets it's just making your trading easy and fun, if you wish, where in a frequent basis you have opportunities arising ready to be traded for us traders. Of course, the DAX, as Singh explained, is made of 40 companies, the most important companies in Germany. I'd like to add that the index composition is not static, it's being reviewed. So when you are exposed to the DAX, not only you're exposed to a very large economy and the best companies are over there, but on top of that, if you think of the concept of diversification, well, you kind of have like a dynamic diversification built in the index itself, by having those index compositions vary from time to time. And the same thing happens with the Euro Stoxx 50. In this case, once a year, the Euro Stoxx 50 would have their composition reviewed. And in this case, of course, the Euro Stoxx 50 is made of 50 companies instead of 40. Okay, so again, very simple way to be exposed to a very diverse market, given the fact that maybe something's happening in Poland, and that is an opportunity. Maybe it's happening in Germany, or maybe it's happening in Italy, and all of those things are going to be impacting the markets in the form of opportunities. Another important aspect of trading Eurex products, in this case DAX and Euro Stoxx 50, is the fact that now you are trading in euro, right? So if you're trading local markets in Asia with a local currency, or US markets, for example, with a US currency, nothing wrong with that. But at the same time, from a diversification point of view, there may be a bit too much US dollar involved in everything that you may be trading. I'm just talking about a generic case. Whereas by being exposed to DAX and Euro Stoxx 50, now you're exposed to the euro, which is obviously a very relevant currency in the world. I mean, it's the second most relevant currency in the world, and that's key. Okay. Timing, being in Asia, to be honest, trading European markets is fantastic, because we, many times the very powerful moves in a market happen very early in the day, given the fact that the European time zone, if you wish, morning hours in Europe happen, later in the day if you live in Asia, isn't it? So we could, as traders, we could certainly position ourselves for very powerful moves that happen later in the day, and you are already in the trade by then, right? So markets start trading at 8:10 a.m. Singapore time. So anytime, after breakfast, for example, you can now start positioning yourself and being ready for moves that happen throughout the day. Micro contracts, I'll talk more about that in another slide, but really it's going to give us so much versatility to be able to have access to micro size. And as I kind of mentioned earlier, Eurex products, like all Eurex products, to be honest, not only the DAX and the EURO STOXX 50, they are born in electronic era. So 1 is 1, meaning a 1 point move pays you €1 in this case. It's very simple to trade futures, which other exchanges may have futures products that are very complicated, products that trade in fractions or many decimal places and things like that. And a point, maybe $12.5, things that are a bit more complex, which could be the source of mistakes as well. Whereas trading DAX, micro DAX or micro Euro Stock 50, it's, I would say it's even simpler than buying stock shares, which is not even a derivative. So great opportunities there with these products. Diverse as well, and not only convenient and powerful, but also diverse. As I said, Europe is made of many countries, which they all belong to the European Union, but at the same time, each country in Europe is quite different and have many different ways to approach all sorts of things, such as, maybe, we have the European Parliament elections in June, but then each country have their own elections in totally different dates, right? And things like that are happening all the time with other economic reports. We have a few examples here on the slides with pushbacks related to emissions, or some countries doing very well like Ireland, or some countries not doing so well like Italy. So again, I guess you can take a look at the slide yourself as I am explaining this using different words if you wish, but the point is every single day something's going on somewhere in Europe. And because there are different countries, because there are different dates, because there are different economic reports, because there are different situations where some countries may be more affected by inflation, some countries may be less affected, etc., etc. So this generates opportunities, which is, to be honest, that's the only thing traders we need. We need products which are safe, products which gives us convenience. Convenience could be in the form of trading hours. Convenience could be in the form of good leverage, low margin requirements, etc. Convenience may be in the form of, very cheap or even free market data fees, so you can have real-time data for very cheap or free. All of this is convenience. And once you got the good products with the good regulation, which is safe, and you have the convenience, the rest you need is a little bit of a spice. So the markets move, so we traders can plan trades and take advantage of such moves. Again, with Europe being made of so many countries, so the DAX as well as the Euro Stoxx 50 is a fantastic ally to take advantage of that. So let's take a look at them real time. Is that okay? Let's move away from slides for a moment, and I'm going to be moving here into trading view. I will also be using, let's do it now. I will also be using Phillip Nova 2.0, which is the platform from Phillip Nova, the new version that is being released. So I am logging in on my other computer screen here. So let me bring it here so you see what I'm doing. So I'm just logging here with Phillip Nova 2.0, and I'm just gonna get the charts up. We're gonna do a little bit of market analysis to understand what's happening in the European markets as we speak, and then we'll dive deeper into the lesson, and then we'll be looking at trading opportunities coming from different time frames, including intraday and everything else. So again, as I said earlier when we were introducing the session, here we go. The platform is loaded on my other computer screen, so I'm bringing it here. So as I said at the beginning of the session, I will need your participation later in the webinar. I will have questions for you. I would love to know the timeframes that you want to trade, so I can do analysis and planning and all of that adapted to you, and you can certainly do that. And by the way, if you would like your chat to be anonymous, because maybe there's a question you would like to ask, but you don't want it to be seen, you can certainly send the question to the panelist, and I will still see it, but no one else. So then I could answer in a way that is anonymous as well, but you get your answers. Okay, so work with me on that. So here's Phillip Nova 2.0. Notice that right here I got DAX and FESX. Okay, so the DAX is the DAX, Eurex DAX, and the FESX is the Euro Stock 50. Now, if I go back to TradingView, okay, I also have, let me zoom in here. Okay, I have FESX, this is my watch list, right? The Euro Stock 50 index futures. And I have 2 rows below FDAX, which is the DAX future. Well, this is not the micro contract. The FESX and the FDAX are not the micro contract. They are the biggest size contract, which is just as nice to trade, but it just happens to be larger. The FSXE, that is the micro. As you can see on the left, we have the word micros in it. So micro Euro Stock 50. So you can see the symbol changes slightly, right? And FDXS, that is the symbol for the micro DAX, okay? And it's the same thing. You're gonna see the same prices, you know, you may have a tick or have a tick of difference, 759, 750, 52, 52 and a half. So notice how the differences are basically nothing. Why? Because it's the same market, it's the same thing. But the contract that you trade when you use such symbols, it's of a smaller size, as you will see earlier. Every point move equals €1 when you trade the micros. Super easy to trade, super easy to remember. 1 point, €1. That's it. So this is TradingView, and I got the 4 symbols on top of each other, the ticker symbols, all on top of each other, so you get to see it. Go back to Phillip Nova 2.0. Notice here how I got the DAX and the FESX, which are the larger size. I want to now manually add the micro contracts. So I right-click and select Add Symbols. And I'm doing this manually, so you know how to do it for yourself. You go to Futures, double-click. You go to Eurex, double-click. You now look for example, micro DAX, double-click. Okay, and with okay, here we go. Eurex micro DAX. Act means the most active contract, so that's the one you want. So double click on that, and notice now how I got the micro DAX in my list. Okay, and same thing if I do the same with the FESX, look for micro Euro Stock 50 down here. So double click and get ACT for active. This is the most active contract. Double click, and here you have it. So let's say you want to get a micro DAX chart on Phillip Nova 2.0. You will just right click, select chart. A very simple chart will appear here in a moment. And once you got that very simple chart and you click maximize, you will have now a professional chart on the screen for you, ready to plan your trades. Okay, the technology of those charts, by the way, is TradingView, which just to be very complete with my explanation here, I am back to TradingView. TradingView is a website, is a platform provider, if you wish. It's not a broker. But with TradingView, which by the way, they have this thing called the basic plan. So all of you, if you don't have it yet, can have access to TradingView. You just need to go to the website. But you can now connect, even though I'm connected here to paper trading with TradingView, you can now connect to see the brokers list. You can pick Phillip Nova, input your username and password, and when you click connect, so now your TradingView will be connected to Phillip Nova. Notice here I got Phillip Nova green light. Here we go. I got here Phillip Nova with a green light, which means my TradingView is now connected to Phillip Nova. So now you can take the trade either from TradingView or from Phillip Nova 2.0, and the trade would be routed through Phillip Nova to the Eurex exchange in Germany, and you're ready to trade micro Euro Stock 50 and micro DAX. Okay. Anyway, I thought that was important to explain, so you know how to take your first step with these products if you're not trading them yet. Okay, so overview. Well, let's take a look at Euro Stoxx 50 first of all, and I'm gonna start far out in time. I'm looking at a monthly time frame, and if I zoom out, well, notice how this market is moving very high. There is some price action here from the past in 2000, so this market is not making all-time high like some other international indices are, which in my view it's a very nice thing because all-time high it's high. And while a market making all-time high could keep going, the fact is that it's very high, and therefore often you have these, all-time high, and then you have a pretty significant crash. So I would say that from that point of view, the Euro Stoxx 50 is a little bit on a healthier territory after a very relevant breakout out of these highs. Okay, this was 2 months ago, 2 months and a half ago, we broke out of this very key resistance point, and we are now traveling higher, and probably we'll have some price action, impulse correction, that kind of thing in this upper area, which in my mind, technically speaking, as a trader and as a technical analyst in this case, we are in a pretty healthy environment instead of being in the unknown of an all-time high, which it may keep going, or because it's very high, all-time high, it may have a very severe retracement, like it happened with many markets. With the DAX, if we were to look at the DAX, we do have a different scenario where the DAX is indeed making all-time high, so more similar than other indices in the world. So again, talking about diversification, you can see the beauty of being exposed to these markets. Of course, both indices are made of equities, so they are both moving in the same direction because it's equities, but at the same time, you can see how the nature of those markets, while similar, it's quite different too. So I wanted to take a step back in time all the way, with those monthly timeframes. If we were to look at this closer, and I was to look at a daily timeframe, which is more likely the typical timeframe that you check in a daily basis or something like that. So we can see here, and I didn't present what we have on the screen. You can see these green circles. I will explain that in a moment. But we can see here that the market is moving higher. Most importantly, I would like you to look at the bottom part where we have blue dots. Okay, what are those blue dots? This is what we call AutoClimate. AutoClimate is a piece of technology that our company produces. Later in this presentation, I will give you a coupon code, so you can come to our website and get access to this technology for free. Okay, so no worries about that. You'll have access to it. This AutoClimate is basically telling you which is the smart side of the market in which to be. Okay, should you be a buyer or should you be a seller? That kind of thing from a statistical point of view. Okay, later we'll talk about different ways on how a market condition could be assessed, the pros and the cons. Right now, I'm doing this a little quickly. Later, I'll take a bit more time. So anyway, so blue for the DAX. If we look at FESX, we have blue for FESX. In other words, we have the equity markets, moving up. Statistically speaking, our technology suggests that being a buyer has a statistical advantage versus being a seller, and we can see that. But most importantly, apart from the direction of the market, from a timing point of view, from a price point of view, so we can see those green circles, which represent what we call UFOs. We call this technology auto UFOs, and UFOs means on-field orders. So we see on-field orders to buy located at 2052. So the expectation is, if this market was to drop a bit, it will come where the buy orders are waiting to be filled, and the moment those buy orders get filled, so price would continue moving higher, continuating the blue climate that is suggested on the bottom part of the screen. So markets don't move up and down in a straight line. Typically, you have an impulse followed by a correction, etc., etc. And the question is, so where is the next impulse going to start, right? So based on our technologies and our market analysis, and later I'll talk about other ways on how to assess that too. So 5022, anywhere between 5022 and 4937 we have a significant amount of buy on field orders waiting to be filled, and therefore this is a very relevant price point in the marketplace. With the DAX, we have a very similar situation. Of course, different price points. That is 18,563 to 18,232. But we have, again, this green circle below price, whereas if the DAX was to retrace a bit, coming to these price points, buy on field orders would get filled, and we would expect a movement to the upside as a continuation of the blue climate that we have in the bottom part. So same market condition, different positioning, whereas the DAX is making all-time high all the way, where the Euro Stoxx 50 is not. So you would say one market has produced moves that are maybe too far too fast compared to another market which is more in a reasonable territory. In other words, for you out there, mean reversion traders, counter trend trader, maybe the DAX is a better candidate for this type of trades, given the fact, given what I just explained. Whereas for you out there, trend followers, probably trading the Euro Stoxx 50 in its micro format or full size would probably be a better instrument, given its positioning, putting on the side current price action, but given the fact that we are not making all-time high, so the market is in a much more stable condition. All-time high, again, it's powerful, but could also be erratic. Anyway, so this is what we have as our quick initial look at the Euro Stoxx 50 and the DAX. I only looked at a monthly and a daily time frame. I'm going to go deeper into other time frames and other opportunities in a moment as well. So micros. I did mention micros earlier. Singh as well has mentioned micros earlier. Why? Because it's so convenient. Again, I'm using the word convenience one more time because it's important for traders. One of the reasons why it's very important to have convenience with the size of your trades, which is the micros, is because that helps you not only to reduce the capital requirements for your trades. In other words, a few years ago, you would not be able to trade the DAX unless you had a pretty large account size. Well, now you could trade the DAX no matter your account size. You could trade the micros, and maybe you have a very large account size, but you are in practice mode because you are now starting to trade the DAX for the first time in your life. And even though maybe your account size is large, you want to keep the size small. Or maybe you are in a starting phase of trading and you need to go small size. So whatever that is, micros are going to be very convenient. But most importantly, that also helps you to be precise with your scaling either in or out of the positions, which help you directly with the risk management. I have a few examples ready coming in the following slides, where I will mention a specific entry and a specific exit, and we will see that by changing the size, you change the risk of the trade. And of course, I would assume everybody understands that, but just in case you're a new trader, risk management, and this I'm going to say with capital letters, it's absolutely key in being successful as a trader. If you were not to manage your risk when you trade, you may be lucky and make a lot of money, but your account could also be completely destroyed in a couple of trades just because you took too many contracts in one trade and the market went against you and you did nothing about it. So managing the risk is absolutely key to be safe, to be consistent, and the fact that we can do it with micro contracts, which allows you to go to fine-tune the position size as small or large as you wish, it's again convenient. It's fantastic. Okay. Here on the slide, we also mentioned hedging, liquidity. We also mentioned the fact, as I said before, that you can start trading these products at 8:10 in the morning Singapore time. So very cool. Anyway, we talked about connecting your trading view to Phillip Nova, so you could take your trades with Eurex products through Phillip Nova, either using their Phillip Nova platform or using TradingView that can be connected to Phillip Nova, and all the routing to the exchange is done by Phillip Nova. Cool. So let's get into a proper methodology, which I'm going to use a few slides to cover the methodology, and from there we will go back to real-time charts. And I'm looking at the time and I'm looking at the chat box. How is it going, everybody? I would need a quick response in the chat box. If all is good, just type a quick OK. If I'm going too fast, too slow, anything, please go ahead and let me know. Again, super appreciated if you are open to be interactive with me. It means a lot, and it's extremely, extremely helpful. Okay, so proper methodology, right? So, there are many ways on how to trade, and you could certainly apply everything you know about trading to the DAX with full contract size or micro contract size, with the Euro Stoxx 50, full contract size, micro contract size. You could apply everything you know about trading to those markets, easy. But let's pretend you don't know how to trade. Let's pretend you were to take all trading methodologies in the world and you were to try to organize the various steps that a trader takes to take a trade, and you were to try to simplify the process. What would you say then? Well, then I would say that trading should be a two-step process. Of course, it's more than two steps, but if we were to, again, to keep it very simple, trading is a two-step process where the first question, no matter how you trade, no matter if you do trend trading, breakout, retracements, mean reversion, it doesn't matter what you do, step one would be, should I take a trade or not? And if so, is it time to go long or is it time to go short? That is question number one. And I'm going to show you a different, a few ways on how to answer question one. If you didn't answer question number one before you took a trade, there is a chance, at least in my mind, that you are kind of guessing it a little bit. You are not following a very well-defined trading plan with a set of rules where you are managing your risk, where you are being methodical, systematic, etc., etc. So instead of just improvising a trade, let's not do that, because that will not lead to consistency. Let's go ahead and every time we trade, first answer the question, should I trade, yes or no? And if so, long or short? That should be the first question. In a moment, I will show you how to do that. Once you know if it's time to go long or short, once you know if it's time to be a buyer or to be a seller, then the next question will come in, which is, okay, so let's say I decided it's time to be a buyer. So the next question the next question should be, what price do I buy at? And then, I may be right or wrong, which price do I sell at in case I'm right and take my profit, or in case I'm wrong and I take a small loss, right? So entries and exits, buying prices and selling prices, that would be question number two, right? Typical mistake is that certain traders would look at buying prices and selling prices before they did question one, which is, should I go long or short? And they may pick a good entry price, but in the wrong market condition, and then they see the trade work a little bit in their favor to quickly turn against and stop them out. And that is the typical mistake that is being made typically in an early stage of trading, where traders are not doing a proper assessment of the market condition before they set entries and exits. So in my mind, in this simplification, we want to approach trading from a two-step process. Step one, time to trade, yes or no, long or short. Step two, entries and exits. Okay, so how do we do question one? Well, there are many ways on how to do that. You can do fundamental analysis to decide you want to be long Eurex or DAX. You can do technical analysis. You can look at technical indicators, oscillators, divergences, convergences. Maybe you are Elliott trader, Elliott wave trader. I will work on this on examples and real-time charts in a little bit. My favorite way to do it, as you are probably guessing it, is to use auto climate, which is what I had on the charts earlier, which I will demonstrate in a better way, and I will grant you access to that later in the presentation. So you can also use it. If you do not have a specific method on how to do step one, well, hopefully our tool can help you. Step two is about prices for me to buy or sell. How can you do that? Well, maybe you draw technical support and resistances. Maybe you're a Fibonacci trader, so you draw your retracements and projections. Maybe you are using moving averages and you buy and sell moving averages, or maybe Bollinger Bands or oscillators or candlestick patterns. Maybe you do breakouts. Again, we'll look at real-time examples in a moment. My favorite way to approach this is utilize auto UFOs, because I love order flow. Again, You don't have to do it like me. I will explain, of course, my trading style. Hopefully that serves as a good example. But I will also illustrate different ways on how you can do it. And I said before, there are many ways on how to trade, and both the micro DAX as well as micro Euro Stoxx 50 are fantastic products for all trading styles. Okay, and I will explain that. So example, and this example, I got two examples coming which have to do with reinforcing the methodology and the concepts, but also for the ones of you that may not be trading futures yet. These examples are also there for you to understand a little bit more what is the point value, what is the leverage, these concepts with this example. So here's an example with a 10-minute time frame. You can see number 10 here. Okay, number 10, and I'm using FDXS, which is the micro DAX futures. Okay, so example, and let's say you are a UFO trader like me. You found the green UFO below. This is where you want to buy. You found the red UFO above. This is where you want to take profits. And therefore, you set a buy price at 18,203. Why? Because 18,203 is the UFO. Okay, maybe you are not using UFOs. Maybe you have a support line there, and that's where you want to buy. Again, the concept is what matters here. You have a sell stop located below. In my case, the UFO ends at 87, so the stop is 86, right below. Okay, so if I'm wrong, I'm out. And why? Because the expectation is if this market comes to where the buy orders are, buy orders will get filled, and that will push the markets higher. So that's where I want to buy. If I'm wrong, the market will not go up. So the moment it goes below, I am proven wrong, so I want to get out. That's simple. Okay, no thinking, no emotions, mechanical. And the sell price, of course, is going to be the red, because when the DAX gets to the red, the sell orders will get filled, so you would expect the DAX to fall from the red. So anyway, in this case, as you can see, that was a beautiful trade. The DAX came to the green, bounced up. There was a 1, 2, 3, 4, 5 candles, 10 minutes per candle. That was a 50-minute trade. This, my friends, is intraday trading, as the title of the slide suggests. 50-minute trade where we bought at 18,203. Stop was located at 18,6 in case we are wrong. Target was located at 18,246 in case we are right. And this trade was taken with one micro contract. Remember, the beauty of Eurex products is 1 is 1 with the micros. So 1 point equal 1 euro, right? In this case, we have a risk of 17 points. How do I calculate 17 points? Well, the distance between 203 to 186, that is 17 points. So because I got 17 points of risk, it means that I got 17 euros of risk. So if you have a small account, I'm pretty positive, even a small account could afford 17 euros of risk. Let's say you want to take double the risk. You buy 2 micros. You want to take 3 times that risk, 3 micros. You want 10 times the risk, 10 micros. Very simple. You can see the beauty of the micros now, isn't it? So when you buy 1 micro, the value of the contract is $18,000. But you do not need $18,000 to take the trade. With Phillip Nova, you only need a margin of 1,650 euros, which means that you are dealing with an 11-to-1 leverage. This varies through time, by the way. Could be a little more, it could be a little less, but it's around that. So now what happened? This trade was profitable. You went to the target, which was 43 points away. The distance between 203 to 246 is 43 points. So you made 43 euros because 1 is 1. So that's a 2.5 to 1 trade. It took, actually, that's a mistake. It's not 25 minutes, it's 50 minutes. Sorry about that. And it was a 2.6% return on your €1,650 investment in 50 minutes. Okay, so you can see the power of this, the risk management. I think this slide kind of summarizes many of the things that I have been mentioning, isn't it? Where you have the convenience, you can take these trades anytime during the day, really. This market is closed, let's call it 3 hours a day. So many times during the day, you can execute those trades. And with the leverage effect and the liquidity and everything else, worst case, you lost 17 euros per contract. Best case, you made 43 euros per contract. Okay. Now, beauty of trading the DAX or the FESX is, now let's pretend that you tell me, oh, but intraday trading is too fast for me. I don't have time to be there 50 minutes. My trading style is, I want to be slower pace. So instead of using the 10-minute time frame, what you could do is change the time frame, for example, 30 minutes or even larger. And now suddenly, by doing the same thing, you just became a swing trader. Take a look. We have a green UFO below, a red UFO above. So let's say you want to buy at 16,985. Why? Because if it comes down to 16,985, the buy orders will kick in. You would expect the market to go higher. So you want to buy there. That's 16,985. In case you're wrong, of course, you want to have your stop below. In case you're right, you want to take your profits where the red is. In this case, the DAX, micro DAX went into the green UFO, bounced in the opposite direction, and when you go to your target, you're out. In this case, we got, multiple candles. Each candle is 30 minutes. So the duration of this trade was 6 hours. It's a much more relaxed trade, but the same characteristics apply. You took one micro contract. The risk in this case was 41 points, so 41 euros per contract. If you wanted double the risk, double the contracts, triple the risk, triple the contracts, double the risk equal double the reward. If you did one contract, it's 76 euros. If you did double the contracts, it's double that, triple the contracts, triple that, etc. This was a 1.85 to 1 trade, 6 hours, and that was 4.6% return on your margin, 1,650 euros per micro contract for the DAX. By the way, with FESX, the margin is kind of like a third of that. Okay, that changes through time, but the margin required for the Euro Stoxx 50 contract, both micro or full size, is like 3 times less than the DAX. Why? Because it's less volatile. So it moves more slowly, which also may make it a better instrument if you are newer to trading. The DAX is a bit more volatile. If you have some experience under your belt, you will love it. Okay. Anyway, so now that these concepts are approached, let's go back to the methodology, and I will move into the real-time charts. And with the time that we have left, we'll do some practice. For me to do practice, I also need to introduce you to timeframes. We didn't talk about timeframes, just 2 timeframes, the 10-minute and the 30-minute. Reality is that depending on your trading style, sky is the limit. You may be using the 15-minute time frame combined with the 3, the 60 combined with the 5, the 240 combined with the 15. Depending on the time frames, you can be an investor if you're using monthly time frames, slow speed trading, investing, position trader, swing trader, intraday, high frequency, you name it. It's all about the use of the time frames. So I would love you guys on the chat box to type the time frames you would like to use for your trading, whatever you trade. So I will take those time frames and look for opportunities real time with you on the DAX and the Euro Stoxx 50 with the micro contracts right now. So please give me that information on the chat box. I would really, really, really appreciate that. So again, many ways to do step 1. How can you identify if it's time to buy or not, if it's time to sell or not? Well, you may use moving averages. You may look at the volume. You may look at trend lines, Elliott wave, ADX, Ichimoku clouds, etc. Here are a few examples. In this case, I have auto climate, which I'm going to use it real time in a moment. It's blue. The dot is blue. So I know it's time to be a buyer, statistically speaking. No time spent. That's it. I know it's time to be a buyer. Let's go take trades. Maybe you are not an auto climate guy. Maybe you are a trend line type of trader. You're a technical analyst and you do your trend lines. So you connect multiple pivot highs, or in this case, pivot lows. And because it's making higher lows, and by the way, also higher highs, So you may say, hey, this is an uptrend and nothing wrong with that. So maybe you go with a trend and you want to be a buyer. So AutoClimate told you, blue dot, be a buyer. Statistically speaking, your trend line told you, be a buyer based on your technique. Maybe you're using moving averages. You are using the 8, the 13, and the 21 moving average because you like Fibonacci numbers and you like moving averages. And notice how price closed above the 3 moving averages. That means that the average price movement is going higher. So you want to be a buyer because of that reason. Okay, so all of those are different possibilities. Of course, there are many more, but hopefully these 3 illustrate my point on the importance of first determining if you should be a buyer or a seller. Now, in this case, we decided I want to be a buyer, right? Okay, so now what? Well, now you need to do step 2. Which prices are you gonna buy at? Which prices are you gonna sell at? There are many ways on how you could do that. Find your support and resistance level, find your Fibonacci retracement levels, look at swing highs and lows, pivot points, psychological price levels, breakouts, breakdowns, trend line breaks, candlestick patterns, many ways on how to do all of this. So here are a few examples here. So on the left, actually in the middle, we start with the middle, we have a Fibonacci guy, selected the pivot low, the pivot high, draw the Fibonacci retracements, 23.6, 38.2, 61.8, 78.6, and the 100%. Again, if you're a Fibonacci guy, you know exactly what that is. And now the action would be wait for price to come to the next retracement. And if you see maybe some bullish candlestick, buy, expecting it to rally, right? That would be the action. So buy a retracement into a Fibonacci level. Or maybe you are a classical technical analyst and you are a breakout trader. So you find this very obvious turning point. That's your resistance, where if price breaks and closes above, resistance becomes support based on that school of thought, and then you would take the breakout expecting some continuation. That could be your style. Nothing wrong with that as long as you have a proper trading plan around this technique. Maybe you're like me, you're a UFO guy. So here is your UFO. So you're just waiting for the DAX, or in this case, the macro Euro Stoxx 50. You come into the UFO and you would buy there with a stop below, okay, and a target somewhere above. Okay, so that would be the application. So again, different ways on how to define your entry and your exits, always in the context of first determining should you be a buyer or a seller. I'm gonna take a sip if you don't mind. Sorry about that. So now that we know that, so you know the direction of the market, you know your entries and your exits, you need to calculate your size. Defining your size and defining the desired risk is critical. A typical rule in the market is to never reach more than 2% of your account per trade. So if your account is, I don't know, 1,000 euro, for example, maybe you want to reach 2%, so that's 20 euro per trade, okay, etc. So that would be something for you to identify. I'm just looking at the chat box. Okay, very good. And that's very critical. Okay, that's the last step before you place an order. So you look at the direction of the market, step 1. You look at entries and exits, steps 2. Then you calculate the size not to surpass 2% of your trading account, and then you place an order. So let's do that. Okay, let's do it. Sorry about that. Let's do it. Okay, and as we are going to do this with real-time charts, I'm noticing that I'm almost reaching the top of the hour. I want to give you access to this coupon code, which is claim 8. So you go to our website, tradewithyufo.com/apps. You find your AutoClimate for TradingView, and then there is a $8 cost to get that. Well, instead of paying $8, you claim 8. You use the coupon code claim 8, and it's gonna become free. And this is free forever. So all of you can enjoy it and use it, and with no time talking about convenience, get your market direction identified, which is your step 1. So let's do it. Okay, let's identify a couple of trading opportunities very quick, and then we'll open for questions that you may have. Remember, I am here for you, so please do not be shy. You can actually start typing your questions already. Since I am running just a little bit late, you can start typing your questions. So for example, let's begin planning on a trade on the DAX, micro DAX. So let's say your trading style has you utilize, one moment, here we go. Let's say your trading style has you utilize the daily time frame combined with the 60-minute. You do step 1 with the daily, you do step 2 with the 60 minutes. How would that look like? Well, you will come to the daily time frame, okay, 1D, 1 day, FDXS, that's the micro DAX futures. You will look at your climate, okay, or maybe you look at, maybe you are a MACD guy. So because the 2 MACD lines since that date crossed above 0, since here to you, this is an uptrend. And because we are still above 0, so you are ready to be a buyer. Maybe that's what you do if you're a MACD guy. Maybe you are not a MACD guy. Maybe you are a pivot high, pivot low type of guy. So you connected those like that. Okay. So you got first touch, second touch, third touch is confirmation. So you're in an uptrend, and therefore you're ready to be a buyer. Okay. So maybe that's you. I'm just giving you alternatives. If you're like me, you look at your auto climate, the dot is blue, you just go for it. Statistically speaking, you have odds in your favor to be a buyer. You don't have a guarantee. That's why we manage the risk with the size and the stops, the way I did mention. But certainly, it's a good thing to know that odds are in your favor. At least statistics are there. So now that I know I want to be a buyer with the DAX, what would I do? Well, remember the daily and the 60 minutes. So then you would drop to the 60 minute, find your entry point, which I could have found either a few hours ago or 1 hour ago. This is a 1 hour time frame when price came to the green UFO, and I could have purchased at 745 with a stop below. Okay, and now I'm expecting these to start continuing. That's what I'm expecting. Okay, like it happened in other cases. Okay, and if I'm wrong and it goes against me like this, here's my stop. So this is the size of my loss from 745 to 705. This is 40 points, therefore 40 euros of risk in this particular trade. Okay, you also need to plan a target, which I will do that in another example if you don't mind. Now let's say that instead of a daily 60-minute trader, let's say you tell me, no, I want to be a bit faster, I want to trade 240 and 15 or 60 and 5. I want more action. I want more trades per day. So you can come in here and look at the 4-hour time frame and do the same thing. So with the 4-hour time frame, you have your blue dot. Okay, so you are in a statistical market where being a buyer produces a statistical advantage. So what would you want to do? Well, drop to the 15-minute time frame to find your entries. And in the 15-minute time frame, your entry is here. So you would wait for price to come here, and when the market rallies, you would take profits at 7.99. Okay, so entry 7.45 with a stop 7.25. I will write it down so that way it's more easily understood. So we're gonna have, I need to identify a target, I need to identify an entry and a stop loss. So the target would be the red, 18,799. The entry would be my green UFO right there at 745. So 18,745. And my stop would be below 726, which below 726 would be 18,725. So in other words, now I'm risking 20 points. So my risk is 20 points, which is 20 euro, right? I'll write it like that with an E. So 20 points equal 20 euro. And if I'm right, I'm gonna make what is that? Like 54, right? So I'm risking 20 to make 54. Pretty okay. Okay, and then you place your order with Phillip Nova and you just go for it. If instead of doing it with the DAX, you do it with the Euro Stock 50, so the only thing that we change is you need to change the symbol to FSXE instead of FDXS. So you just load the other symbol and you just go for the same process, which in this case, we are dealing with a similar market condition with the blue dot. And since I have surpassed the time for the session, so I believe I will stop here. I will just do a quick speed of the light recap, and then we'll open for Q&A. So quick speed of the light recap is trading the DAX or the Euro Stock 50 puts you in a position of trading a market where time of the days are going to be convenient, leverage is fantastic, regulation, safety, trading in the Eurex exchange together with Phillip Nova, you are fine. And then the simplicity is, I guess it cannot be better in the sense that one is one. We are talking about products that were born in the electronic era. We're not talking about these old school, commodity futures contracts that are very difficult to trade. We are talking about something modern, efficient, and ready for any trader, no matter if you are young in your trading career or you are more experienced. Ways on how to trade them: you need to identify your trading style. Are you active? Then you use lower time frame. Are you less active? Middle time frames. Are you more passive, investor style, larger time frames? And once you got your charts and your plan of the trade, follow a two-step process where step one, you identify the direction in which to trade that gives you a statistical advantage. Step two, identify entries and exits, manage your risk with a stop order. You can also use options, but that's for another day. And of course, calculate the size, which with the micro contracts is very flexible. You can even scale in, scale out, etc. And with that, I believe I kind of reach the end of my time, and I'm happy and ready for your questions, everyone.
All right. Thank you for the very insightful session, Jose. I think we have a very shy crowd tonight, but not to worry. If anyone has any questions, you may send them to us in the survey that will be popping up later on when the webinar ends, or you can also email us at nova@phillip.com.sg. So yeah, seeing that there are no questions coming in, we can conclude the webinar here. So thank you again, Jose and Singh, and thank you everybody for your time tuning into this webinar tonight. And we'll also be sending everyone a link to today's webinar recording so you can watch it again if you'd like to. And that's all for today. Thank you and have a good night, everyone.
Thank you very much, everyone.
Thank you, everyone. Cheers.